Hey guys, what's up? This is Francisco with Valareso Capital, and today we're gonna go through the weekly watch list. I'm gonna share with you some of my opinions in the indexes. We're gonna go through the S&P 500. We're gonna go through the Nasdaq 100, and we're also gonna go through the RTY, which is the IWM. And then I'm gonna share some of the ideas that I have for the week. And just remember that this is based just in my personal opinions, and is not a financial advice to buy or sell any of the stocks that we're going to mention in the video. So now that we have that out of the way, let's start with the watch list. As you can see here in my screen, I have the ES, which is the S&P 500 future contracts, and we can see that they're open right now, right? We're trading somewhere around half a percent positive. We can see that is that candle right there, but basically we continue to be in a downtrend, right? The lines that I have here in my charts, if you're new to the channel, I have the 50 daily moving average, which is the purple one. I have the 200 daily moving average, which is kind of the pink one right here. And then I have the 21 exponential moving average, which is the blue one right here. And then I have the 8 exponential moving average, which is the kind of the orange one right here. And then the dotted line that I have right here is just the 3 ATR, which is basically the Keltner channels, using a 3 ATR as my as the distance that I'm looking from this 21 exponential moving average. And I basically just use that one to understand if the stock is really extended from the mean, which is the blue line right here. So now let's go and let's start with some of the analysis. As I was mentioning, this is the S&P 500 future contracts, and we are below all the key moving averages that I watch. And as long as we continue to be below a 50 daily moving average, I consider that this is a downtrend and the path of least resistance continue to be lower. And I'm actually looking at this, if we happen on Monday to get a rally up above into this declining 21 exponential moving average, I think that's a great place to set up some shorts, as we continue to see that the selling volume is increasing as the market continues to be under distribution. I think that a very important target to the downside is going to be this 4,000 level, and that's going to be basically kind of this low right here that we have. So the index continues to be the path of least resistance continue to be lower, and that's what price is telling us. Now let's move into the next index that I watch, and this is the NQ, which is the Nasdaq 100 futures contracts. And we can see, right, we're below a declining 50 daily moving average, we're below a flat 200 daily moving average, and this 21 exponential moving average continues to act as resistance, right? So what I'll be looking for next week, if we happen to rally in the beginning of the week, let's say that we rally into the Fed meeting, I will basically be looking for some rally somewhere around this level right here, somewhere around this 13,750. And that's going to be near that 21 exponential moving average. And I think that's going to be a great place to set up some shorts and then continue to look for more moves to the downside in this index as well. Now let's go into the RTY, which is the IWM futures contracts. Right here is the RTY. And we take a look here, right? We continue to see that the selling volume continues to be high. And this is basically just chopping around. There's not much of an edge looking at this chart, but something that I'm watching is for this index to actually test this declining 50 daily moving average. Last time that we tested, right, we were rallying. We tested right here, and then we have the strong move to the downside. So that's something that I'm watching. If we happen to rally at the beginning of the week, have your alerts ready. I think there's a high probability chance that we are going to test this 50 daily moving average, and then we're going to find some sellers, and this will probably continue to move to the downside. Now, I do have two you can see the list that I have right here, right? This is the list that we're going to take a look at. I have two bullish ideas, which are basically natural gas and crude oil. And then the stocks that we're going to take a look at, I think they're really good candidates for bearish opportunities if we happen to rally early on the week. So First of all, let's start here with natural gas. This is the natural gas futures, right? This is NG. And if you want to trade an ETF, you can take a look at UNG. But for me, I always find it easier to do my charting work on the future contracts, since there's a lot more of liquidity in these products. So first of all, looking at the UNG right here, we can see the pattern, right? We have this really strong move to the upside. We see that we stop right there near these highs and near that plus 3 ATR level. And then we had this strong move to the downside, but we found support right at that 50 daily moving average. And now we're just chopping around a little bit, but this is actually really constructive, right? You can see that we have found support at that 21 exponential moving average. And as we found support, we're also printing higher lows here as we continue to print higher highs as well. I think that a low risk entry zone for a long entry here in natural gas is right here where we are, which is basically at that 8 exponential moving average. And you can use, if you want to keep your risk really tight, you can use this 21 exponential moving average as your stop. Or if you're willing to risk a little bit more, you can use this low right here as a support level. I think there's a high probability that we will continue to follow this trend and that we are actually gonna retest these highs perhaps in the next couple of weeks. So this one is one that I'm looking at for some long opportunities. And then the next one right here is crude oil, right? We have seen that we have a really strong move to the upside in crude oil, right? We have some geopolitical things going on in the world, as we all know. And right, crude oil has been really affected because of that, right? We have this base, we had a lot of volume coming in, and we have this really a strong move to the upside. We can see here that we are extended, right? We are above that plus 3 ATR level. And that basically is like a rubber band, right? We get that rubber band really extended. And at some point, that rubber band is going to kick back in price, and price is going to retest that 21 exponential moving average at some point. As we saw right here, we get extended, we pull back, we get extended, we pull back. And right now that we got really extended, now we're pulling back again into that 21 exponential moving average. A level that I'm watching for to get long exposure is this 100 level, which is going to be basically somewhere around this area right here. So I think that if we get a pullback into that 21 exponential moving average, I think it's going to be a really nice opportunity to get some long exposure. You can either trade the crude oil future contracts, or you can also take a look at USO, which is the ETF for crude oil. So those are the only two bullish ideas that I'm watching for the week. And then now let's go with some of the various charts that I'm watching right here. As you might know, right, we have basically we have a really strong move in solar, right, which is basically the TAN ETF, and we have many names from the solar sector that are actually trading that had a really strong week last week. But given the circumstances of the market, I think, in my opinion, that we are basically going to continue to be in a correction environment, and these high flyers, these solar stocks are most likely going to pull in at least to retest this 50 daily moving average right here. So let's take a look here. Basically, what we have here in SPWR, we basically have a double top short, which the setup basically is, right, we have this peak right here, which is 21.49, and the trigger for that short is actually we have the move above that, but we actually have a close below that move. So what is the setup? The setup is basically shorting SPWR somewhere around these levels right here, using 21.49, 21.50 as your cover point, and then look for a retest of this 50 daily moving average in this name. As you can see, we have increasing selling volume, and I think there's a high probability that the SPWR is going to retest this 50 daily moving average at some point, and perhaps it's going to bust it, and we're going to continue to move lower. But the setup is a it's kind of an easy setup, right? You're basically looking to risk this in order to make this. So it's somewhere around a 3-to-1 risk reward in the name. Now let's go into the next name that I have here, and I have First Solar, which is FSLR, and kind of the same setup, right? We had this really strong move after earnings, right? And we're coming right here into this level of supply. We stop right there at that level, and the short that is triggering in FSLR is actually a short right here at this 50 daily moving average. So the trade is basically using this 50 daily moving average as a cover point, or probably this high right here, and then looking for FSLR to lose this 21 exponential moving average, and perhaps we're going to get a retest of these lows right here. So basically, we're just letting the market give us what it wants to give us, right? We're just managing risk using these high as a stop, or maybe even the 50 daily moving average, and looking to and actually expecting that FSLR is going to lose this 21 exponential moving average, and it's just going to continue to move lower. Now the next name that we're watching here is ENPH, and you can see that basically these names have very similar patterns, right? We had that really strong move, right? That came here, we had the flag, then we had the strong move up, but we are basically coming right here into double top territory. And as you can see, this is basically the same setup, right? We have the move, right? We're using this high as the cover point, which is 183.15. We have the move above it, but then we have sellers coming in really strong and closing the price well below this double top line. So what is the setup, right? The setup is basically using 183.15 as your cover point, or you can also use the 200 daily moving average as your cover point, and then looking for ENPH to retest this 50 daily moving average down here. So basically looking to risk this in order to make this somewhere around a 3-to-1 risk reward as well. Now let's move into the next names that we're watching. And here is Ford, right? We kind of have this, right, this head and shoulder stopping pattern. We're breaking below the neckline. We found resistance right there at the supply level, and now we're breaking below this 200 daily moving average. And as soon as we're breaking below this 200 daily moving average, I think that there's a high probability that Ford will just continue to move lower. So what will be the setup here? You can actually even, I think if we turn it, it's kind of easier to see, right? If we just flip the chart, which is basically what I do, you can see that you can use this 200 daily moving average as your support, and then just looking for a move all the way to the +3 ATR extension up here. So let me just put the chart back where it was, and basically the setup is using this 200 daily moving average as your cover point and looking for a move all the way down to this +3 ATR level. So looking to risk 1 in order to make somewhere around 3. So that one is looking pretty interesting to the downside, basically flagging, right? For me, this is actually a bear flag below this 200 daily, and I think that we will continue to move lower. Now let's go into the next name. I have Lucid here. Let me just erase these levels. And basically, right, it's kind of a pretty similar pretty similar pattern, right? We have seen, right, we kind of have this stopping pattern. We lost the 50. We're coming below this 8 exponential moving average, and right, we are unable to go above this 200 daily moving average, and now we're flagging. The company already reported earnings. We kind of have this bear flag, and we're looking also for a move all the way down to the extension to the -3 ATR extension right here. So what's the setup? The setup is basically using this 21 exponential as your covering guide, and then just looking for Lucid to break below this flag and go all the way to the -3 ATR extension. Now the next name that I'm watching is Tesla. And right, Tesla is basically just giving up here, right? At the beginning we found support at that 200 daily moving average, then we bounced back to that 21 exponential moving average. We lost it. We extended all the way to -3 ATR, and now we just continue to make lower lows and lower highs as well. So we basically bounce back again to that declining 21 exponential moving average. And now we're finally losing that 200 daily moving average in increasing volume. And I think there's a high probability that Tesla is going to at least test this low right here, and I think you can use this 200 daily moving average as your covering guide. So as you can see, basically risking 1 in order to make somewhere around 2, and I find that setup to be really, really interesting to the short side. And basically what we were talking about, right? Remember that we were talking about looking for a bounce early in the week. So we're going to be able to get a bounce in Tesla all the way up to that 200 daily moving average. And if we are able to get that, we can short it right here. And then our risk reward is going to be somewhere around 5 to 1, 6 to 1. If we short it as close to that 200 daily moving average as possible and using that line as our covering guide. And then the last name that I have to share here with you is AMAT, which is basically a semiconductor name. And we can see here, right, we're selling in increasing volume. We basically tested the 21 exponential moving average. And now we're basically, right, for me, this is a bear flag below a 200 daily moving average, right? We're below all the key moving averages. And this continues to be a downtrend, right? If we actually turn this chart, this actually looks pretty bullish, right? If we just turn it. So basically looks really, really bearish here in my opinion. So if we happen to bounce early in the week, what is going to be the setup? The setup is going to be to short AMAT as close to that 21 exponential moving average as possible and target a possible move all the way down here to -3 ATR. As you can see, this name tends to make moves all the way down to the extensions. So those are basically the names that I'm watching. And I'm also watching one name. Let me include one name here. I'm also watching Oracle. And for Oracle that I'm watching, right, Oracle, as you can see, already report the earnings. We have some volume coming in, but we're below this 50, right? And I think there's a high probability that Oracle perhaps is going to test this 50 daily moving average. And I think that's going to be a great spot to actually short Oracle in order to see if we actually break this bear flag to the downside. So the setup here will be waiting for Oracle to trade as close to this declining 50 daily moving average, and then use that daily moving average as your covering guide, and then just waiting for Oracle to perhaps break this bear flag and continue to move lower. So those are the names that I have for you guys. I hope that you find these weekly watch lists helpful for you. And I think that the market will continue to move lower. We can take a quick look again to the Nasdaq futures, and this continued to be a downtrend, right? This continued to be a downtrend, and I think that we treat it as a downtrend, and we just wait for strong bounces into declining moving averages so that we can set our short positions with really small risk, so that we can have an optimal risk reward to the downside. So thank you so much, guys, for watching, and I will see you on future videos. Thank you.